Two of the world's largest miners are joining forces in a move that puts an end to China's bid for greater control of Australia's resources. BHP Billiton and Rio Tinto have struck a deal to share their stakes in Western Australia's vast iron ore reserves, effectively ending the controversial Chinalco bid for a $20 billion share in Rio Tinto. Hayden Cooper reports.
It would have been a deal to remember. But the Chinese suitors for Rio Tinto have been sent packing, and a new relationship is ready to bloom.
Between Rio and BHP.
Two of the world's mining masters will pool their iron ore resources in Western Australia. Across the minerals-rich state, BHP and Rio will merge adjacent mines and share transport. It's been a decade in the making, and it'll save the companies $10 billion.
I imagine there'll be two aspects to the deal, two incentives. One, boosting production as efficiently and as quickly as possible. And I guess the other aspect to it will be cost savings. They'll be looking at driving down costs as much as possible and enhancing their operating margins from the Pilbara.
For the debt-laden Rio Tinto, the deal has added significance. BHP will pay them $6 billion, and Rio will also use a rights issue to raise billions more.
Well, I think it's a win-win for both companies. Iron ore is a major business for both companies. Combining the Pilbara operations makes a lot of sense.
But not to everyone.
Overall, I'm not pleased. I have a concern about the iron ore resource of the Pilbara, the world's second largest iron ore resource, basically being in the hands of one company.
The West Australian government fears the loss of $1 billion in royalties if the two giants operate as one.
I think anyone looking at this agreement, the way it's structured, it would seem to me to be self-evident it has been structured to avoid paying stamp duty. Now, I don't think that's a reasonable way of behaving.
Chinalco too is less than happy that its bid has been spiked. Analysts in Beijing can understand why.
When Rio Tinto had big financial problems at the height of the financial crisis, when it couldn't get money from other channels, Chinalco reached out and offered cooperation. Both sides reached an agreement that they were both satisfied with, which helped Rio Tinto get out of its difficult situation. Now Rio Tinto's situation is better, it looks like it doesn't help anymore, so it's cast Chinalco aside.
It's the worst possible outcome for the Chinese.
But it's not the last we'll hear from the Chinese miners. They've gone to the Prime Minister's office to make sure the door remains open for future deals.
The government maintains a policy of openness towards foreign investment. We will always make decisions in the national interest.
Kevin Rudd's being careful not to send a message of xenophobia to Chinese investors, but the collapse of the Chinalco bid spares him the tricky decision of whether to grant Beijing the access it wants. And politically, that will always be an issue of rancour.
Their position of strength would have been absolutely immense, and we would have been held over a barrel, and it would have been an extremely bad outcome for our nation.
Now it's not Beijing but Britain that wants in. Rio's new deal with BHP Billiton needs approval too.
Last year, China enacted its anti-monopoly laws. If BHP and Rio do merge or set up a joint venture, they'll have to submit that for inspection, and I think China will be against such a move.
A point no doubt expressed to the Prime Minister. Hayden Cooper, Lateline.